Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Okay, so in this particular video, we are going to be discussing the trend Viper indicator. Okay, the trend Viper indicator. Now, this indicator is a custom indicator, so you know what to do, right? You have to download it and add it to your indicators library before you'll be able to use it on your chart. Okay, I have already done that, so I'm just going to be adding the indicator to the chart right away. Right, the trend Viper indicator, and this is how the indicator looks like. Okay, it's quite a straightforward indicator, and it can be an effective addition to your trading toolkit. Okay, so if you are a kind of trader that looks to identify market trends, okay, this indicator actually simplifies your trading for you. Right, as you can see, it uses the principles of moving average crossovers, right? And the signals are quite straightforward. When you have the shorter period moving average cross below the longer period moving average, you have a sell signal. On the other hand, when you have the shorter period moving average cross above the longer period moving average, you have a buy signal. Quite straightforward. Okay, so if you are a fan of the crossover strategies, then this indicator is going to interest you a lot. Okay, so now let us just look at a few examples. All right, let's look at a few examples of how to trade with this indicator. Okay, so now we can see that we had the buy signal here, right? Because the shorter period EMA, or rather, let us look at the settings of the indicator so we can get. All right, you can see we have the fast MA, we have the slow MA. Can you see that? You can see that the fast MA is the one in lime color and the slow MA is the one in red color. So when the fast MA crosses above the slow MA, it's a buy signal. It's as easy as that. So even complete beginners can make use of this indicator. Okay, even complete beginners can make use of it. So after you have gotten your buy signal, ideally you should wait for a confirmation. All right. For example, you can see that we just had a bearish move. The last move was a bearish move. So instead of rushing to enter a buy trade after this signal, make sure you wait for a candlestick confirmation. For example, we can see that we had a bullish engulfing here, right? So that can be your confirmation. Okay, because in some cases the price might go above the moving average and eventually drop back below it. So when you have a confirmation from the candlesticks themselves, it can give you an additional layer of confidence, right? So now we had a bullish crossover, we had a bullish engulfing pattern. That was a confirmation, and we could have considered entering a buy trade around here. Now after entering a buy trade, we can set our stop loss below the swing low. Okay, we can actually set our stop loss below this low. After doing that, for our take profit, you can decide to use resistant levels for your take profit, right? If you're going to be using resistant levels, that means we would have considered exiting around here. Can you see? This is actually a resistance zone because there was a rejection, and you can see there was another rejection here. So we would have considered exiting around here if we are using resistant levels for our take profit. But if you wanted to use the opposing signal from the trend Viper indicator, then perhaps we would have exited here because this was when the slow EMA, the fast EMA, sorry, this was when the fast EMA crossed below the slow EMA. So it depends on you, actually, depends on you, whichever method you want to use as your exit strategy. You can even use other indicators for your exit strategies, right? It's left for you, the trader. Okay, now let us look at a sell example. All right, so we had a sell signal here, as we can see. In fact, initially this was when the main sell signal came, because the market was just coming out from a consolidation phase. We can see that we had quite some consolidation around here, right? Can you see that price was moving sideways around here? So this was when we had the first, major bearish crossover, and then this was more like, consolidation, because the moving averages were kind of just, intertwining, you know. So this was when the main sell signal came. So if you had entered a sell around here, then you probably would have just seen some fluctuations throughout this whole period because of these consolidation signs. And then finally, you would have now seen some profits after the price broke downwards. Okay. So if you had entered a sell around here, you'd have considered setting your stop loss above the swing high. It is necessary that you set your stop loss at appropriate levels. Do not set your stop loss just immediately above your entry point for a sell or immediately below your entry point for a buy. It's not advisable. You have to give the market some space to breathe. All right. Market does not move in a straight line. So you have to give the indicator, sorry, you have to give price. You have to give price some space, some breathing space, give the market some space to fluctuate. So instead of setting your stop loss just immediately where you entered a sell, set it above the previous swing high, because if that bearish move is going to be valid, ideally the price should not get to that stop loss. So if your stop loss gets hit, then you would know that there's likely a bullish breakout. Okay, so you set your stop loss above the previous swing high, and for your take profit, like I said, you can either use support levels. This is the case of a sell. For a buy, it's going to be resistance level. So you can either use support levels for your exit, or you can decide to wait for when the fast EMA from the trend viper crosses above the slow EMA. So in that case, we'll probably still be in a sell trade by now. But if we are going to use support level, then we would have exited already around here. But if we're going to use the crossover from the trend viper, then we'll probably still be in that sell trade by now. Okay. Now, it is important to observe good risk management. In addition to setting stop losses at appropriate levels, make sure that you use good risk to reward ratios. Okay. So if you are risking $1 in one particular trade, your potential profit target should be at least $2. It is important. Okay. So that even if you have the same number of winning and losing trades, you will still be on the winning side. Because imagine if you won 3 trades, right? Just do the maths with me. You won 3 trades and you lost 3 trades. And let us assume that you were risking $1 in each trade and your profit target was $2. So if you lost 3 trades, you would have lost $3. And if you won 3 trades, you would have won 3 times 2, which is $6. So in that case, you are still on the winning side because you lost $3 and won $6. So you are in a $3 profit. So can you see the importance of good risk to reward ratios? All right. So that is it. That is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and do not forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading. I hope to see you in the next video.